What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart along with the stock market, as we had yet another day of massive red over there in the stock market following the release of unemployment data, in which the unemployment rate did actually go to 4.2%, which met expectations. That is actually the first time in 5 months that we've actually met expectations rather than missing expectations. And it actually ticked down from the 4.3 last month to 4.2. We'd zoom in on that just a little bit. You could see this thing was starting to spiral out of control. Boom, there was a pullback happening in there. At the same time, there were some misses on things like non-farm payrolls. I won't bore you too much with this data. It's essentially measuring the amount of people who became employed or newly employed, excluding farming. It did miss, and previous months were revised down. And while the market was red today, the market still anticipates it's only going to be a 25 basis point rate cut come September 18th, rather than 50 basis points as if there was an emergency that was taking place. The stock market rallied into that in the first 15 minutes, then took it all back and was just down fest for the next hour and a half, then really just stayed sideways all day long for 4.5 hours, sitting down here at the lows. With that, we see red over here in the cryptocurrency market, and we're at a really critical level when it comes to Bitcoin, sitting on top of that 50-week moving average. It's hard to know if that will be critical or not. We can really just look through history and say, what has it meant historically? Typically, hitting the 50-week moving average multiple times isn't good. And certainly, breaking down below it has never been good, especially not once we've already hit an all-time high, which, as we know, we just barely peaked into one over there. So as we head into the weekend, it's going to be a pretty big thing to watch. We can look at it really closely to see that it just barely kissed it, but it did touch it there. And of course, the stock market closes with Bitcoin sitting right on top of that as we head into the weekend. Now, with all the action that's happened in there, you can look over on the right side of the screen. You can see the altcoins have actually held up relatively okay through all of this. Bitcoin's more near the bottom of the list, one of the lower performers. My suspicion still remains that this dominance chart, this safety trade dominance, has essentially reached the max threshold of as far as it can go. This is kind of one of those hopes that I'm still holding on to in the midst of all of the chaos that's going on out there in macro markets that is not looking pretty. But we've looked through this multiple times here on the channel. This is how the dominance played out in 2018 through 2020, heading into 2021. An example of that type of structure outside of looking at dominance charts is really just looking over here at Coinbase. It's essentially the exact same thing that it's done. It got back to its retracement levels. It hit it again, then broke down. And essentially, that's really kind of like right where we're at. It just hasn't budged yet. But really, that's exactly what we saw over there with Coinbase as it hits its 702, holds it, hits it again, then eventually goes into its breakdown. Still, this thing holds here. I don't think there's any more room for it to climb to the upward direction, which is why I think we saw Bitcoin perform lower than most of the market today. Now, when it comes to Bitcoin cycles, we're at a pretty critical level, right? This is how long it has historically taken for this market to get into expansion. And right now we get to go into the weekend with Bitcoin on the 50-week moving average and the stock market being sketchy heading into the end of the week and to close the week. Unemployment did show a sign of taking a chill pill on this reading. A lot of focus is on that non-farm payrolls. And while there definitely is a slowdown, as we can clearly see that trend of it slowing down, you go back and look at things like the great financial crisis when the warning signs started showing up in there. We actually started putting in some negative blips happening in here where instead of job creation, there was job destruction. And then, right, 2008 really starts to kick in, right? There's February of 2008. We start making negative prints in here. That's right around in here. Then, of course, that leads into the big, great financial crisis. Those types of negative prints haven't showed up yet. The trend is definitely not friendly. And there's definitely not some sign saying, hey, things are improving here. But we did see unemployment chill. So that was a big thing as we're heading into here to see if that would happen. Now, of course, it's getting real sketchy because time is ticking. Here you go. This is where Bitcoin's longest period has ever been before heading into expansion. If we get beyond that, say we get 2 weeks from right now and Bitcoin hasn't expanded, and if Bitcoin takes out the 50-week moving average, there's a pretty difficult argument to sit there and say that Bitcoin is in any type of bull run. There's no historical precedent for Bitcoin to be touching the 50-week moving average twice and then breaking it down and that be in a bull run. That's never happened. And there's no historical precedent to go this long and not have an expansion. This is the longest one that there's ever been. There's never been one longer than this. We've had 3 years, but we've never had more than 1,250 days, 251, whatever. So a big thing to keep your eyes on throughout the weekend, of course, is just where we're sitting at right now, where the weekly candle does end up closing, and then seeing how the stock market responds on Monday. We've talked a lot about how this is like navigating uncharted waters, and that while the market was bullish and looking for expansion, this is the first time we've gone into a moment like this, and there hasn't been expansion over there in the stock market. If you were rules-based on 50-week moving averages, you would actually say this is not good because it's never historically been okay for us to be hitting the moving average, especially twice. You can argue right in here, but as you could see, there wasn't some majestic bull run coming after that sent Bitcoin above 100K like most participants were looking for. You can look back in here to 2018. By the time we got to the 50-week moving average, not good. If we're hitting the 50-week moving average down in here, which we're not at an all-time high, but even if we're hitting it down here, right, not good. And typically in actual bull runs, you're doing a good job maintaining above that 50-week moving average until the market has really started to slow itself down. So if you're simply rules-based based on the 50-week moving average, the fact that you're hitting it a second time, that doesn't happen when you're getting back to the all-time high, ready for some big blast off to end up happening. That just doesn't happen. Right? This is where the previous all-time high was from back in 2013. Healthy maintenance above the 50-week moving average, getting back to it again, like we keep talking about, navigating uncharted waters. This is the first time that you've had this happen at the peak of the market. Never have you ever had this happen where you get back to the all-time high and then you're dancing around with the 50-week moving average. And that's why this has been so complicated, because we just haven't gotten an expansion to happen over there in broader markets, which is an element that occurs for every single expansion for the cryptocurrency market. So there's definitely things to be on the watch for over here. And I totally get it. We're 6 months removed from the euphoria of February and March and April. The market now is in extreme fear. Every percentage down at this point is utterly painful, whereas the first percentages don't really feel painful, but after enough time passes by and after enough percentages happen, then each individual one starts to accumulate more pain. You can see the sentiment change happening over there on Twitter, and it certainly happened before today. This whole week has really just been fear, selling, scared stuff happening over there on Twitter. And while I don't like what I see over there in the stock market, it is uncomfortable for Bitcoin to be back on its 50-week moving average, and typically breaking below it is not good. I still am left with this piece of the puzzle, and this is the one that really eats away at me a lot, that we're this deep into it, right? The market's finally felt enough pain, and that this is typically where these types of charts will break down. And of course, this is the safety trade dominance, right? So this like points to big rotations throughout the market happening. And again, showing examples like this for Coinbase. We spent a lot of time talking about this. Coinbase was unable to get into expansion. What did Coinbase do? It got back to its 702 retracement, waddled around down here, getting back to the 50% retracement level here, getting back to the 702, then ultimately breaks down, right? But 702, 50, 702. What are we at here? 702, 50, and then back to the 702. This is typically what you do before these things break out. So there's certainly a complicated picture out there, and this has been an unquestionably difficult market to navigate. And I think I've tried to communicate how difficult of a market this is to navigate in here, especially after seeing the altcoin market pinpoint nail the 702 retracement as well. But as we head into next week, we kind of met with two different fates here, right? You're sitting on top of the 50-week moving average. You're approaching the amount of time. We'll see how the market responds at the beginning of the week. And then, of course, in the middle of the week, we'll end up getting CPI again. My suspicion is we'll see CPI drop from 2.9% to, if it does on average what it's done for the last 4 months, which no way to know if it will, but if it averaged what it did for the last 4 months, it'd be like 0.1%, which would end up being a 2.5% year over year. We'll see how the stock market and the Fed responds to that next week. Keep an eye on this to see how this closes throughout the week, and then we'll check in on it on Monday. And that will certainly be an interesting day because September 9th, what will that be? We'll have the Bitcoin weekly candle close. We'll see how it treats that 50-week moving average. Also, September 9th represents the exact amount of time it has ever taken for this market to expand. It has never gone longer than that. From peak to beginning of expansion, it has never taken that long ever before. So keep your eyes peeled for Sunday night when the weekly candle closes for Bitcoin. That also will be when the United States stock market futures open up. We'll see how the stock market's going to respond to the new week as well. I do get it. I see the sentiment out there on Twitter. After prices are down, people typically want to be told, hey, you can just go ahead and sell because it's going to keep going down and it's going to be okay. I'll never do that. I'll tell you when I'm taking action, if I'm buying or if I'm selling. The time for me for selling was when we were back at retracement levels, when I was really vocal about it. At this point now, it's about just seeing, can any type of bottoms come in here? I'm typically selling in the midst of euphoria when everybody is screaming at me. But then after, we reach those extreme fear levels, it's just not a place for me to sit here and sell, right? I mean, it's just not how I do it, especially because I'm not going to give up on this yet. Doesn't mean if there's not some bounce or some big retrace or something like that I wouldn't do it again, but not when we're down and everybody's already in a lot of pain. But either way, if you're wanting to understand a lot of this economic data stuff that's going on out there, and of course, we cover a variety of topics over here in the newsletter on Substack. This most recent one's 28 minutes long. We're talking all about this unemployment stuff, what's going on with the Fed, inflation. It's the topic of everybody, right? The weekend's a perfect time to catch up on these things. You can check that out over there at blockchainbacker.substack.com. Of course, you can check out bcbacker.com with over 40 videos and 11 hours of content teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro. There are links down here in the description of this video to bcbacker.com and to the newsletter at blockchainbacker.substack.com. Otherwise, hopefully the crypto market can give us a weekend to give us a little bit of a chill pill for the weekend. Otherwise, it may be active over there on Twitter. But all right, that's going to be it for this one, guys. Thank you so much for watching. I've noticed that in the afternoon, like as I go back and do a lot of the editing before I get to the closing right here, I kind of do the whole video and then I record this at the very end, that my voice does sound a whole lot different at the end of the day than it does at the beginning of the day. Because I kind of start recording within a few hours after waking up in the morning. Now I've been awake all day. I'm super awake. But we'll stop rambling now. I'm going to wrap it up. Thank you so much for watching. If you could, please like the video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.